morning. Good to see you.
Good morning, Mike. Thanks for having me.
Absolutely. So, it's been, I imagine, a pretty good backdrop on the demand side, right? Shortages of new and used cars. Pricing is much higher for cars themselves. Obviously should increase demand for auto parts and service. Do you not see that continuing if production comes back and used car markets loosen up a little bit this year?
Well, for sure. I mean, the industry fundamentals are strong. We delivered a very good fourth quarter and a record year in 2021. Our sales were up 10.7% on comp sales basis. We delivered 48% earnings per share growth, really the highest margin expansion we've had in the history of our company since we were public in 2002. So very pleased with our results. As we enter this year, we are excited about the industry fundamentals. I mean, the absolute price of a new vehicle is up about 30%. A used car is up significantly, which means people keep their cars longer, and that bodes well for repair and maintenance for us.
Yeah, and obviously the average age of a car on the road is actually pretty stretched at the moment, right? About a dozen years, I guess. You mentioned in the conference call that you expected wage and product costs to be up for this coming year in the mid-single-digit percentages. Is that something that you can kind of recoup on your own pricing and preserve margins? I know you did also lift guidance a bit.
Yeah, exactly. I mean, this has been a very rational industry for a long time. And yes, we've been able to price to cover inflation. We're really pleased with that. And we expect to be able to do that once again this year. We've guided margin expansion once again in 2022. So there is an assumption that we'll be able to pass that on.
Where investors are trying to parse through some of the broader inflation data we've been getting and whether we're reaching a peak or not. I mean, just in terms of that pricing power, is there a point at which you would expect to see a turnover in terms of consumer demand? And in general, given the fact that prices have been climbing, has that changed the mix?
Well, it's obviously an important time to make sure that you have pricing power, Morgan. So, in our case, we're investing behind our brands. We're really excited by the fact that Die Hard is now a $1 billion brand. We crossed the $1 billion mark. We acquired this brand less than 2 years ago, and already we're over $1 billion. So it helps when you're able to offer your customers a differentiated offering. And we just announced yesterday that the Die Hard is officially the first automotive battery to obtain a validation from UL Circularity or the closed loop space. And in terms of environmental sustainability, that's a big step for us and a big step for our industry. So we do believe we have pricing power, and we're going to continue to invest in our brands to enable that.
Hey, Tom, thinking about the future, we're coming off of a weekend where got a lot of commercials for EVs, and I know it's going to take years, but as we enter a period where a hefty part of the population owns an EV over an internal combustion, how does the business change?
Well, certainly, there's been a lot of things happen, Carl, over the years in terms of technology and automotive. And for our entire time, we've been adapting to those changes. So we absolutely intend to adapt. Obviously, every electric vehicle still has wipers. They still have to be cleaned. And they all have a 12-volt battery. And that's why we're excited about this recent move with Die Hard, because our entire team and customer base is playing a role in environmental sustainability, because we're bringing back all the Die Hard batteries are being brought back into our store by our Die Hard customers. Our team members are putting them on a truck and sending them back to our supplier, such that old Die Hard batteries are being used to make new Die Hard batteries. So we are repositioning our business for the future, and we will adapt to those changes as they come along.